In 2011, a headline in The Guardian declared Bitcoin a failed experiment. In 2014, Bloomberg ran a piece titled Bitcoin may be following this classic bubble curve. In 2018, The Economist called it a speculative frenzy heading for collapse. And yet, as of today, Bitcoin is worth more than the entire GDP of Poland. So either the world's smartest financial journalists have been wrong, repeatedly, for 15 straight years, or something else is going on, something nobody wants to admit out loud. Here's the thing that should bother you. Every major financial scandal of the last decade has involved crypto. FTX stole billions. Terra Luna erased $45 billion in a week. Celsius, Voyager, Three Arrows Capital, all gone. The industry has produced more financial crime per square inch than almost any other sector in modern history. And yet, every single time, after every disaster, every congressional hearing, every 80% price collapse, crypto comes back. Not just survives, comes back bigger. Bitcoin hit $20,000 in 2017, crashed to $3,000, hit $60,000 in 2021, crashed to $16,000, sat above $100,000 in 2024. That's not how dying things behave. And that's the question nobody is really answering. Why does crypto keep surviving? And more importantly, who's actually keeping it alive? To understand this, you have to go back to 2009. Not to talk about Satoshi Nakamoto again. You've heard that story. Go back to what was happening in the world around Bitcoin. The global financial crisis had just gutted the retirement accounts of 60 million Americans. The banks that caused it got bailed out with public money. The executives who ran them got bonuses, and 0 people went to prison. The message that sent to ordinary people was crystal clear. The system is not designed for you. So when Bitcoin showed up promising an escape hatch, a financial system with no banks, no gatekeepers, no bailouts, people didn't just buy it as an investment. They bought it as a protest vote. And that emotional foundation, the feeling that the traditional financial system is rigged, has never gone away. In fact, it's gotten stronger. Because since 2009, U.S. household debt has climbed to $17 trillion. Real wages have stagnated for the bottom 50% of earners. And the homeownership rate for Americans under 35 has collapsed to the lowest level since the 1960s. The people most likely to put money into crypto aren't doing it because they read a white paper. They're doing it because they feel locked out of every other wealth-building system that exists. The stock market feels rigged. Real estate is unaffordable. Savings accounts pay nothing. Crypto, for all its chaos, at least feels like it belongs to them. But here's where it gets interesting. Because in 2024, something happened that fundamentally changed what crypto actually is. The SEC approved Bitcoin ETFs. And within weeks, BlackRock, the world's largest asset manager, the company that manages $10 trillion, became one of the largest holders of Bitcoin on the planet. Let that sink in. BlackRock. The same institution that represents the financial establishment crypto was supposedly created to destroy now holds billions in Bitcoin. And they were followed by Fidelity, Invesco, Franklin Templeton, and State Street. The very infrastructure crypto was built to replace has now absorbed it. And this created a strange paradox, because the approval of these ETFs sent Bitcoin's price through the roof, which made the early crypto believers feel vindicated. Their protest vote had won. The mainstream had been forced to acknowledge them, but what they didn't notice is that the game had quietly changed underneath them. When you buy a Bitcoin ETF, you don't actually own any Bitcoin. You own a financial product issued by a bank, custodied by a bank, regulated by the SEC, settled through traditional financial infrastructure. You are once again trusting the banks. The revolution had been packaged into a product and sold back to the revolutionaries. and they bought it enthusiastically. Now here's the part that should make you genuinely uncomfortable. Because when an asset gets institutionalized, when the biggest players on Wall Street start holding it, its price no longer moves based on fundamentals or adoption or real-world utility. It moves based on flows, and flows can be manufactured. In traditional markets, this is called momentum trading. You don't buy something because it's valuable, you buy it because other people are buying it, which makes the price go up, which attracts more buyers, which makes the price go up more. Crypto has always operated this way, but now it operates this way with institutional leverage behind it. Here's a concrete example. In early 2024, the Bitcoin ETFs launched. In their first 2 months, they attracted over $10 billion in inflows. That buying pressure pushed Bitcoin's price up. The price going up generated news coverage. The news coverage attracted retail buyers. The retail buying pushed the price up further, which generated more coverage, which attracted more buyers. It's a self-reinforcing loop. And the institutional players at the top of this loop have something retail investors don't: the ability to exit cleanly before the cycle reverses. This isn't a conspiracy theory, it's just how momentum markets work. And it's been documented in equities, commodities, and real estate for decades. Crypto just does it faster, with less regulation, and with a much thinner exit door. But here's the thing that ties all of this together. And this is the part that almost nobody talks about. Crypto doesn't need to have utility to survive. It doesn't need widespread adoption. It doesn't need to replace the dollar or revolutionize finance. It just needs to keep producing stories. Think about the assets that maintain long-term value in the public consciousness. Gold, real estate, blue-chip stocks. They all have one thing in common. They generate a continuous narrative. Stories of people getting rich. Stories of markets recovering. Stories of why this time is different. Crypto has mastered this better than any asset in history. Because its volatility, the very thing that makes it a terrible currency, is what makes it an endlessly compelling story. A 60% crash isn't just bad news. It's a comeback waiting to happen. And a comeback generates content, coverage, new believers, and new money. The people who lost everything in Terra Luna made headlines. But the people who bought Bitcoin at $16,000 after the FTX collapse and watched it go to $100,000, they made converts. And this is the uncomfortable psychological truth at the center of it all. We are wired to remember the success stories more vividly than the failures. Behavioral economists call this survivorship bias. We see the people who got rich. We don't see the far larger number who lost everything quietly without a YouTube video to commemorate it. Crypto has built an entire industry on top of that cognitive blind spot. So here's where we actually land. Crypto is not going to zero. The institutional money is too deeply embedded now. ETFs have made it a permanent line item in too many portfolios for it to simply disappear. But it's also not the revolution it promised to be. The decentralized dream has been systematically absorbed into the very financial infrastructure it set out to replace. The rebellion got a ticker symbol and a management fee. What it has become is something more specific and more honest. The world's most efficient psychological machine for separating people from their money, while giving just enough of them life-changing returns to keep the machine running. And whether you think that's brilliant or criminal probably depends on which side of a trade you've been on. The real question isn't whether crypto is good or bad, it's whether you understand what you're actually participating in when you buy it. Because there's a difference between gambling and investing. And there's nothing wrong with gambling, as long as you know that's what you're doing. The people who get hurt aren't the ones who bought Bitcoin knowing it was speculative. The people who get hurt are the ones who were told it was the future of money and believed it. And the people doing the telling, they always seem to get out just before things go sideways. If you want to understand the financial stories that actually shape your money, and the ones conveniently left out of the headlines, hit subscribe because this stuff matters, and most people won't explain it to you until it's too late. Are you still holding crypto? Drop your take below.